Three, two, one. Ni hao, huaning. Welcome to, well, it's not really GM Sonic. It's a Corval cast. Welcome to a Corval cast with me, Corval, here, where I take the time and the space to talk about the things that are kind of generally interesting to me, what's on my mind, maybe practice a little Chinese with you guys. So today, I got a big fat document here. I've been reading threads all day on, what's happened in the markets, what caused the big crash, who's to blame, how did it actually happen, everything. And I've distilled it down to kind of like my ideas on winners and losers, the general sentiment, some kind of ideas of where we're going to go forward. But there's still a lot of questions left up in the air. So this is a discussion. If you guys are watching, please feel free to drop in the comments. You think I'm wrong? You think I'm right? Leave a voicemail. Am I missing anything? All that stuff. So let's get into it, guys. It's going to be fun, but we're going to start this off right, okay? We're going to start this off proper, like cultured, civilized people, and we're going to be practicing our Chinese because this is important. This is going to be really important going forward, regardless of your perp strategy, regardless of the fate of your favorite perp decks. It's going to be extremely, extremely important that you learn Chinese. I cannot stress this enough, particularly this phrase here. I'm going to try and do it for the first time from memory. And so if this is right, then I am well on the path. If not, I don't know. Be sure to try and do this at home. Remember, this is Dogbone Village. And again, I have forgotten how to say that in Chinese. I think it's Guo Gun Kun. I don't know. We'll get there. All right. So first up, let's see. Can I actually do this? Make you guys sit through this for the actual analysis you signed up for, but it brings me a lot of joy to do it. All right, so I think I was having some luck here with the oil brush. Let's do that one. Let's do like a smaller one. I think it was something like this. Let's see. I think that's dog. I think bone is, I kind of remember this one quite well. And then that. And village, that's a real son of a gun, dude. This one gets me every time. I think it's something like this. I can't remember the last part of this character. I think it's again something like this. Nah, that's just completely wrong. All right, so this is my attempt. Let's pull up my old work here, see if I was right. Ooh, let's get a little side by side here. Okay, I totally butchered it. I totally butchered. Actually, I got dog kind of right. All right, so dog is actually supposed to be more like. This is so awesome. I love that I can just make you guys watch this, however many of you are here, 40, 50. Watch me stumble through Chinese. All right, so again, let's just do this right. This is what it's supposed to look like here. So dog is more like this. And then bone, I kind of nailed this one. All right, and then village. All right, this is the one that tripped me up. Actually, I wasn't that far off. All right, so it's like no tail on this mother trucker. All right, okay. All right, and again, this is the only little bit of alpha I'm giving you in this segment here, which is memorize this. Memorize this. Burn it into your heart. Okay, don't ever forget this. This is atrocious here when I'm using the pencil. All right. Go gu chin. Go gu chin. That's how you say it. Go gu chin. Go gu chin. Dogbone Village. Don't forget it. All right, it's unfocused, completely unfocused. All right, enough of this. Enough Chinese. Goku come. Yeah, that is kind of what it sounds like. All right, so if you guys stuck around with me through that, now you're in it for my big old document here. So let's switch this one to this. All right, I gotta look. See, this is all I got. you guys are interested, I can share my notes later, or like somewhere else. But I'm just going to use this as a reference for now. Starting off, okay, so what the hell happened on Friday, right? The general timeline is this. Overnight, if you're in the West, something about like 6 a.m., I saw it at like about 8:10 p.m. Thursday night. Beijing announced controls on rare earth exports and trade. Okay, that happens. Trade war, we're in it. Normal. Later, a little bit later, World Liberty Financial drops 30%. It's on like next day, about 12 hours later. World Liberty Financial drops 30%. A guy opens a short on Bitcoin with size. Trump tweets a few minutes later about tariffs. And then all your assets are eviscerated in like 3 minutes. Actual numbers here are grabbed from the Wintermute's testimony, which disappointingly enough, Wintermute's article or their write-up on X about this seemed like it was AI generated and it wasn't really. I mean, there was some good stuff here, but it was kind of just like whatever numbers. I'll give them to you. Here we go. Median drawdown, 54%. This within an hour. Everything kind of drew down on average, 54%. ETH and Bitcoin, most stable, like no shit. They have the deepest liquidity, so they're the least subject to this. And we'll get into like what actually happened here. It's still not super clear. But I mean, we can make some obvious assumptions. Aggregate centralized exchange bid-ask depth dropped 65% at the trough, but recovered to greater than 90% pre-event levels within 35 minutes. So what that means is the spreads got all fucked up. As you probably noticed, that's when you were seeing things hit zero price. There was no depth to the order book. Let's see here. Almost all rebounded, and the average rebound was 84% in 30 minutes. That's what Wintermute is claiming here. So yeah, that's what happened shortly after the tariff announcement from Trump. So the initial reaction was, market manipulation, all this stuff, but it seems like it's a little bit more complicated than we might seem. There are some accusations being thrown around about Binance's pricing oracles being messed up, causing this cascading event. And what it seems most likely is that it is just typical cascading liquidations paired with some additional structural weaknesses. So one key thing here, some numbers that are being thrown around quite a lot are like perps were really inflating and making unsteady the entire market structure, right? You see some people mentioning that market makers have been bidding up these assets. That's why when the market makers pulled their funds, everything went to shit because there was no actual demand for any of these assets. These order books were not filled with like organic, natural buy and sell orders. Dude, I'm with you, MRO. It sucks, dude. But primarily what was causing the strong negative price action downwards was likely the tariff announcement tipping things past the liquidation threshold. And then things kind of just spiraled from there. But let me go back to my bird's eye view here before we dive into more details. All right, so here's my general assessment. Biggest losers on the day, Binance, in my opinion, completely shit the bed with their oracles, depegging, Ethena. What were the other assets here? Or no, depegging USDE, Ethena, Wrapped, BETH, and BN Sol. All depegged and crashed really hard. We'll get in a little bit more of that later, but really shook a lot of faith, I think, in Binance. Also, a lot of Binance's systems went down. You were unable to trade. A lot of modules were down. They've acknowledged this themselves. Actually, here, let me share it. The Binance actual statement on this is they kind of are blaming it on just general market volatility, but they have accepted responsibility for platform modules experiencing technical glitches. Certain assets had depegging issues due to sharp market fluctuations. Binance remains committed to addressing these issues. This is where they are they have decided to compensate people about $300 million dispersed to affected users. So at least they're doing some repair there, but they're having a lot of trouble kind of moving away from this idea that the contagion started on Binance because things crashed the hardest on Binance from what it seemed. Binance, for their for their side, at least according to what they're saying. A lot of the price actions were like, what do you call them? GUI glitches. Like they didn't actually hit those prices. But I mean, you still had a lot of people really boned. We're going to talk a lot more about Binance later. Binance is really key to this. Additional losers, alts, down about 80%. Atom, big one, hit zero before rebounding. $5 to $0 in about 30 minutes. Other big loser, anyone with any kind of leverage, perps, loans, whatever. You probably got your ass handed to you, okay? We're talking some honestly ridiculous movements here, but I don't need to tell you that. You saw it yourself. Yeah. In Brazil, Warlock is saying there's an instant deposit method called PIX. It takes seconds to settle, but Binance took like 6 minutes to clear their deposit. Quite common. Lots of platforms were experiencing a lot of stress because of the amount of activity happening between the liquidations and people rushing and panicking. But the thing about Binance is it seems like there was a complete and total meltdown on like everything, dude. You couldn't buy, you couldn't sell, you couldn't hedge, you couldn't stop loss or anything. Lots of stop losses being broken with no recourse. So I've been told, okay? Now, other big losers, people with cross margin enabled. Please disable cross margin. I don't know, unless you're a hedge fund, unless you're farming that funding rate, I don't really see why, and you're monitoring all your levels, I don't really see why you would have cross margin enabled. Just put in a stop loss, okay? Like if you're going to go all in on the bet, just go all in. Like I don't really get the idea behind cross margin. Someone out there testify. Tell me why you use it if you're using it. Justify yourself to me. Centralized exchanges for me are also a big loser. Okay. Kind of shaking my faith in them because also what I would consider outstanding performance of the decentralized exchanges has proven to me that it is a superior technology and probably where we should be continuing to invest our time and energy towards. Obviously, I'm a little biased. I'm a Sonic guy, DeFi over here, flying tulip, hell yeah, brother. But this was a really great stress test for these models, these perp dexes, and I think they did pass. Let's see here. Other one killed. Perp dexes, ironically, also I think are a big loser. I don't think it's going to be as long-term devastating as people say. We'll know more, I think, as more facts come out about it. But from how things are shaping right now, I think perp dexes are going to come out. Maybe people have a little bit more healthy respect for them and maybe try to understand actually how perps work before trading them. But I'm not going to get my hopes up. I think the appeal is still there, and I think people are still going to use them. Retail, also a big loser. Retail totally got pwned on this, completely hosed on this. I don't have it on here, but I also think market makers. I don't know. That's a tricky one. We'll come back to it. Biggest winners. Stink bidders. Anyone that had a bid at like a stupid price for an asset is probably super happy. Spot holders, super happy. Actually, I want to go back to stink bidders. There's a guy that was calling for Sonic at 17 cents on the timeline. He was fucking celebrating, dude. He was popping champagne. He was ringing the bell, dude. He was tweeting and retweeting and like, I fucking told you so and everything, as if he could have predicted this. Quite funny, I think. Quite funny. You're going to see a lot of that. The KOLs are like cockroaches, dude. I should know I'm one of them. They don't go anywhere, okay? And they're going to seize any opportunity for it. You guys remember when I said that government shutting down? It's going to be bullish. Complete guess. I had no fucking idea. But I was right. And so I get to claim the credit. Stupid times we live in. Anyway, stink bitter, super happy. Spot holders. You know that grand old expression, sitting comfy in spot? Wow. Must have felt so good to just see everyone else getting gutted and you're sitting comfy in spot, knowing that no one's going to liquidate you. Biggest winner, another one, BNB, which somehow was completely unaffected by all this and is hitting all-time highs today. I think Hyperliquid and DeFi in general are also winners. I'll throw in the other perp decks. I'll throw in Lighter, which to be fair, I've never used. I am a hype bag holder to some extent, but I'm not a Lighter holder. But I will say that they also performed fairly well. Also, our various chains did great. Sonic did great. I think Spooky was having some trouble. I was raging at Spooky, but I think that was some infrastructure issues beyond them. Let's see here. Yeah, and we're going to talk about the differing opinions on auto deleveraging because I think it's an interesting point of conversation. Aave is a big winner. Athena is a big winner because despite the listed Binance peg, Athena operated flawlessly. Redemptions were always happening at price. Aave had updated their risk parameters and their pricing oracles well in advance of this, and that's why they didn't suffer any price depeggings or any, what would you call them, unfair liquidations occurred on Aave. So good on them. I used to give a shit about their DAO structure and everything, but they actually do have gigabrain geniuses. They're somehow managing the risk appropriately. So good on them for updating their risk parameters for something like USDE and making it work. I mean, what better proof that you guys know what you're doing? DeFi overall winner. Again, I can't stress it enough. Insider traders. Those guys won big too. At least 100 mil. At the very least 100 mil. But when we get into the conspiracies, the numbers could range up to a bill. A fat billy, dude. That's crazy. Well, I mean, a lot of blood spilt for it, so I guess it makes sense. That's right, decent crypto. Smash that like button. Smash that retweet button. Boost this. Warlock was spared. I'm glad, dude. I'm glad Ave's looking out for you. Let's see here. Oh, I see. One time I was cop trading some dude. He was using Cross. The dude shorted Doge and almost killed me when I saw it was minus $300, but it rebounded. Yeah, I mean, I don't know. It just seems like if you're using Cross, you're playing a little too fast and loose. I've had some bad experiences with Cross. I've just switched to just using isolated liquidity for everything. And if I want to top it up, I top it up. But I like add to the position. But I still just don't quite get the Cross because it's like I'm just letting the casino reach into my pocket. Like I don't really get the need for that. But I guess if you're a set it and forget it kind of guy, it's your thing. All right. So where should we start here? That's kind of my biggest losers, biggest winners. Now let's go into kind of the details here. I'll just pull up some examples of theories and kind of try and tie them together here. I think is probably the way I want to do this. First up here, we've got this guy, DeFi Hanzo. He's saying he's going to tell us what really happened. I tried to pull up good news stories, but all of the news stories are just referencing these guys, just referencing these posts. That's the state of modern journalism. Not a single person called Binance to get them on the line. Let's see here. Is it? Let me just close. Let me close out Dogbone Village ever so briefly. Dude, what the heck? Fine, I'll do it this way. Okay. All right, Crypto Hanzo. Let's see what this gigabrain genius has to say. So from my notes, he's pretty much blaming Binance and Wintermute. He claims Wintermute moved $700 million to Binance before the crash. So like this claim here, I don't necessarily think there's any significance to this. As we've discussed before, market makers, their job is to make the market, and how they do that is they move funds around all the time. So it's not really, I don't know, that big of a deal to me that they're moving this much money. I would need additional information to say that this is bad or good. It seems neutral. He claims that the order books on Binance went hollow, no bids, no walls. And this is something that a lot of people were saying. As traditional markets bled, crypto started following. The order books on Binance went hollow. Just a free fall waiting to happen. This is what we were talking about, I think, on Friday when it happened. There were it was crazy because there were no buys or sells below certain prices. So price, when it hit that level, just went straight to zero, straight to one, straight to the stinkiest, grossest bid ever. And the question is, why did this happen? Now, it seems that like a lot of market makers probably pulled their liquidity to prevent themselves from getting blown up, getting bled to death on this, which is, like, I guess makes sense, right? Like you don't want to blow up your fund off of this freak event, but it does kind of hurt our trust in market makers, doesn't it, folks? It makes you think, well, what's the point of a market maker if they're not going to make the market regardless of conditions, right? You guys are only going to be here when the eating's good. Then why should we be getting all these concessions and the like? The volume on Bitcoin candles, for example, at 11 p.m. UTC, 2K sold in 1 hour. At midnight, 12K sold. Again, this is not necessarily super insane to me that volume spiked when the liquidations were spiking. So this guy's analysis, I'm not super hot on. Okay. The biggest thing was his claim that actions were frozen on Binance and only liquidations were happening. And I think he did have a very beautiful, like, so this isn't blaming on Wintermute here, is because Wintermute has all these cells. So I did like his point here that imagine this position, because I think it's a position that some people really found themselves in, and I can't imagine something more awful or horrifying happen. So you're in your position, you have 50x cross, you're making an extremely degen bet. Again, the key point is your cross. I don't really care if you're doing 50x leverage. If you want to fucking gamble, that's your prerogative, okay? Cross is where it's a problem, dude. Cross means you just allowed you expose. This is risk management 101. Why would I expose all of the money in my account to one stupid bet? It's insane. It's an insane idea. Stop it. Let's say you do a stop at 1%. So if the price drops 1%, you're down a shitload because you're 50x leverage, but reasonable to stop it out there. But the market dumped 50%. Your stop never hit. Your account got nuked 25 times over. And if you are mirrored across pairs, it's game over. So I want to take a moment of silence for our comrades that may have gotten lost in a similar situation much like this. I'm sure it was hundreds, if not thousands. But I mean, that's not all. Okay. So this guy, not a super big fan of his analysis, whatever. But I think it gives us kind of a good idea of where people's heads are at. People are kind of really looking to blame someone, and their first instinct, like always, is market makers, right? Like everyone was preying on the blow up of Wintermute. People were saying, "Oh, Wintermute's going to blow up tomorrow." Warlock's got an interesting point here. Market makers have some really advanced bots, but I don't think they could have filled bids and asked that fast. Considering all sex has got lagged to hell. That's another key problem here, is possibly they just couldn't even do their jobs. Let's see. Yeah, I mean, you could long at 70K, but then why do I still need it crossed, dude? I'm at no risk of liquidation. Like, isn't the appeal of cross is that it auto-fills, like it keeps me from liquidation as long as like I have enough cash in the account? If I have a long at Bitcoin 70K, I'm not afraid of liquidation for the most part until yesterday or until Friday. So I don't know. I still think it's a stupid idea to use cross for the most part. Let's see here. Where do I want to go next? So I already kind of discussed Wintermute's testimony on this. It enables you to use the money if you're in profit. Oh, yeah. Okay, that makes sense. Yeah, I forgot about that. Yeah, it does kind of fluff up you get to use the profit from your other trade into other trades. I also feel like, sure, maybe if you are a gigabrain, maybe if you are Megamind yourself, it just seems like to me unnecessary risk surface to introduce into my already highly risky trading strategy. So if you're a smart guy, great. I don't know. Actually, I got because of this crash, I got some pretty nice positions. So maybe that is the play, dude. Actually, maybe I should flip cross and I can just start leveraging my leverage into other things. I can start leveraging pump. Just kidding. I lost a lot of money on pump. I don't know about you guys, but I kept thinking this thing was going to turn, and it just hasn't. Thought it was going to be the biggest cup and handle formation of all time. Thank you, Decent Crypto. Thank you for listening. Okay, so here we go. This was one of the first. Okay, yeah. Wintermute pointed out that it was a fast synchronized sell-off. More than 1,000 wallets were auto deleveraged on Hyperliquid, according to them, pointing out that if you were running a long short spread strat, you absolutely positively got smoked on this. Auto deleverage, if you guys are unfamiliar, is when the system, okay, it's not Hyperliquid, it's not the Perps platform saying that you are making too much profit. We got to stop out your profit or anything like that. The auto deleverage system is to protect the integrity of the entire system, because how these perps platforms work is every long is paired essentially with the short, right? So if your short is making money, the longs need to be losing money. If all the longs get cleared, there's nothing to settle the short side of the transaction, right? That should make sense, right? Like, guys, if I can't sell if there's no buyers, I can't buy if there's no sellers, right? So how Hyperliquid does it is when there is, all right, how Hyperliquid settles these longs and shorts, apparently, from my understanding, is initially they'll try to pair you closing your long or short position with something on the order books. Are there buys or there sells in the order books that can eat up that demand? If so, great, we just settle in the order book, you're good to go. If not, they need to start pulling liquidity from somewhere, right? They need to start pulling money from somewhere. And they do, in fact, pull from their vaults. They do, in fact, have insurance vaults. Insurance is not endless, however. So when the insurance vaults get tapped, as we did on Friday, with an extreme volatile moment, with a moment of extreme volatility, insurance is going to run out. And so their only option left is, do we tap the liquidity providers, the HLP vaults, or we got to start deleveraging the shorts. We got to start saying we can't pay you out here. We're going to pay you out what we can. We're closing your position. I understand, especially if you're in a straddle, you completely got fucked there because you were covering your downside, and now they said you can't cover your downside. But this is one of the risks of using a platform like this, right? This is a decentralized financial platform, right? Meaning we're not going to go to the government to cover positions. We're not really, it's supposed to just run on its own. So you kind of need this backstop like that, this kind of nuclear option when you experience these really long tail risks. It does happen when you're winning too much. Also, every exchange does this. That's right, Warlock. But it happens in the most extreme conditions, right? Because no one wants to do that. The exchange doesn't want to do that. The exchange it's not protecting their money. It's protecting the liquidity providers' money, right? The people that profited off of this were the liquidity providers on Hyperliquid. I kind of regret not keeping my money in the HLP vault, actually, after this. So it really comes down to, who do I protect? Do I protect the investors? Do I protect the traders in the most extreme circumstance? And I think Hyperliquid probably made the smarter choice by protecting the structural integrity of the entire system, right? Because if the investors had gotten hit, no one would want to fucking put their money in this anymore, right? The traders, philosophically, should understand that this is the risk that, I mean, it was all in plain English in the documents. It's just no one expected it to happen. So I totally get it. And I totally get if you disagree with me. Because again, this is just a matter of opinion, right? There's not a real right or wrong answer here. Now, I feel like I kind of explained ADL quite in depth here. Or maybe not in depth, but give you guys a pretty good idea here. And Wintermute's little testimony here, I think, did a good job of pointing out this is one of the first ever cross-margin ADL events ever. It's a last resort when backstop vaults run out. They also pointed out that gas usage spiked to all-time highs. Yeah, I got my space station by chilling for Hyperliquid. No, dude, I got my space station by orchestrating this entire collapse, dude. I was the Bitcoin whale that shorted. I was the guy that depegged USDE, and I'm the guy that bought everything at zero, okay? Now, next up here. Okay, well, we've been talking a little too much about Hyperliquid, but this is actually the best time to talk about it. So after we've explained ADL, this is why I want to explain why I think Hyperliquid is kind of the winner here. I've got someone to back me up on this. This is the post by the Pepe, who I really agreed with. Everyone was dunking on Hyperliquid for a little bit, but Hyperliquid is a much newer platform, much less experienced team. But during this whole debacle, they executed flawlessly. Everything worked exactly like they planned it would, even in their most extreme circumstances. ADL executed, the system is intact, right? Binance, however, completely shits the bed, has downtime. Binance APIs went off. They're not being transparent with their liquidations. They only benefited from a 60% drawdown on alts. They got secret deals with entities, right? Which we're going to get into here. Dr. DeFi sent me a great article, great little write-up talking about how other larger entities manage ADL. That's right, Warlock. Flying Tulip fixes this since it won't use oracles. Arbitragers will need to have sold on chain somewhere to wreck the price like that. This whole thing really at the end of the day is extremely bullish for Flying Tulip, in my opinion, because it does highlight the advantages of decentralized finance, and it's the next step forward, right? It's going to address a lot of the issues kind of that we've seen come up because of this. So we'll get into that maybe later. We'll probably get into that tomorrow on GM Sonic, actually. But going back to why I think Hyperliquid won and what this Pepe was saying here. This was kind of the big one here. He's kind of putting all the blame on Binance, and maybe I'm kind of being over aggressive on Binance too. But it's like, are you angry that you got ADL'd on your Delta? If you got ADL'd on your Delta neutral strategy, who's responsible? The exchange that processed your liquidation, or the exchange that drove altcoins down 80% during API shutdown? This is also one of the fronts on the narrative war here, is the liquidation visibility. Because people are pointing out that Hyperliquid has a lot of liquidations. Jeff from Hyperliquid is making the case that we don't have like an excessive amount of liquidations. We just report our liquidations much more clearly than Binance does. He doesn't even accuse Binance. He points out that in the Binance documentation, if you were to look at liquidations as they occur, the liquidations only show the latest one liquidation order within 1,000 milliseconds will be pushed as the snapshot. So if that happens, if we experience a moment like we did on Friday, we're experiencing an extremely high volume of liquidations, then Binance is not giving you a good picture of what's actually happening, right? If I'm just seeing the last one, if Hyperliquid is showing a cumulative amount of liquidation, it's a much more useful fact. That's right. Both, to be honest, every exchange ever uses Binance API price as a source of truth. And that's a bigger point that I'm kind of going to get at here as I attack Binance ruthlessly over the course of this presentation, is using centralized price oracles is not good. Binance learn this. You're really dependent on Binance's ability to calculate and provide accurate pricing, which would make sense considering they're the highest volume exchange. But as we'll see later on, their methodology is maybe not the greatest or the smartest, just based off of what is available, particularly when it comes to Athena. I had to wet my whistle there. Sorry, folks. Okay. So, yeah, let's see here. I do want to bring up some I think earned criticism against Hyperliquid as well. It's not all, roses over there. Mr. Bojan, I'm not going to pronounce his last name. He points out that while Jeff is claiming that Hyperliquid is super decentralized, there is a consistent problem or a persistent problem that we continue to see in the space, even today. I don't see it changing anytime soon. Is that most things that are decentralized are more like on the path to decentralization, or more decentralized than alternatives, more so than being like truly decentralized. So he points out the validators on Hyperliquid are just a testing. They're not actually validating what's happening. They just blindly sign whatever they ask them to. The code is closed source. On-chain liquidations are a great first step for decentralized finance, but the validator should also be globally distributed and decentralized, not run on a one's K8 cluster. He's not going to get into the issue of the code not being open source. He's doing nerd shit, right? But he's right. He's right. It's not open source. It's not completely clear. It's not completely decentralized. But I would say still a lot better than what we're working with on Binance. Unless you just really trust Binance, which fair enough. Seifu, all that stuff. But then again, he is a felon. I don't know. Felons are good smooth talkers, most often. So we covered how the Binance liquidation APIs work. I guess now we can explain how perps actually work. I got this from Dr. DeFi. I mean, this might be a little redundant, but this was a really good write-up. Yeah, this guy's in the Sui ecosystem, SUI, Sui. He's in that ecosystem. So it's just kind of angled towards like that, but not entirely. He has a really good kind of breakdown of like how perps actually work and how ADL works and how Lighter approaches. So we kind of already talked about how Hyperliquid approached the rapid liquidations. Let's talk about Lighter's approach. Lighter used their insurance fund and a liquidity back. LLP is their insurance fund and liquidity backstop. Design soaks losses in extreme events, socializing them to depositors. Friendly to traders who keep more of their edge and are less likely to get ADL'd, but LPs eat drawdowns. So basically, like I said, it's just, are you going to protect the traders or are you going to protect the investors? So that's all I've got to say about Lighter. I had something else here. Oh, I wanted to point out too that I thought this was interesting. So like how those insurance funds work and why they're so profitable is because they're buying spikes, or they're selling spikes and they're buying dips, right? So they kind of just print money, because when someone is getting liquidated, it's usually like on a new high or a new low. And so they're literally just buying low and selling high all the time only. Awesome piece of tech. Closest I think we're going to get to money only go up technology. ADL. So he has a really good case study here on Athena and how Athena works. But what's interesting to me about this is like large institutions, large funds. He points out how Athena negotiated away ADL on their hedge inventory with major centralized exchanges. What this means is you and I are subject to ADL. The average person is subject to ADL on even Binance, on Coinbase, on all these exchanges. All the exchanges do it. It's not just decentralized exchanges, but on centralized exchanges, they do it as well. But you don't have to take that deal if you have significant size, right? If you're Athena and you're going to bring a big fat chunk of business, they do not ADL you, apparently. They will not ADL your hedged position on the centralized exchange. And there are many other deals similar to this. This one guy posted. Let me see. I could pull up the post, but I'm just going to tell you them anyway. It's just a list. He probably made it up anyway. That 24-hour liquidations, meaning that you have 24 hours when you reach a liquidation price to top up your margin before you get liquidated. The ADL protection and numerous other protections to help facilitate successful trading by these larger funds. These are not accessible to us, but they get them because they have enough money that I guess they deserve it. No, I mean, honestly, it's because the amount of money they have is so destabilizing that if fluctuations are too great, it makes sense. It's not just inside baseball. But we can say that is an inherently unfair system if we were to think of it that way, right? As in, the big guys are getting a lot more benefits than I get, a lot more protections than I get. That's the advantage of a decentralized system, is all laid out plainly. There's no negotiating with the contracts. It just is what it is. That's my bull case, okay, for decentralized stuff. This has exposed a lot of kind of weaknesses in the centralized systems. All right, I guess now is the time to talk about USDE, oracles, price depegging, and whether or not that's even relevant. So in my timeline, I didn't even mention it because it's kind of up for debate now, but USDE and several other assets really did depeg, and USDE definitely depegged. These other assets dropped precipitously, quite rapidly, only on Binance and primarily on Binance. Now, what were these assets? Let's see here. There's a guy who is accusing Binance here, and he had a nice list here. USDE, WBE, ETH, BN Sol. So what's interesting about these is that, where is that Binance list? Basically, look, I'll just fucking explain it. Let's just talk about Athena, okay, guys? Let's talk about Athena and why it depegged, USDE depegged on Binance. Why happened is this. So Binance, they actually were aware that this was an ineffective pricing mechanism, but for several assets, they were pricing them based off, it was a weighted system. Approximately 20 to 30% of the price was calculated using actively trading pairs. What is it actively trading at right now? That informed about 20 to 30% of the price that Binance broadcasted for Athena, USDE, right? This also gets picked up by all the other guys, right? Binance price feeds are considered a high trust by most Oracle providers and most other exchanges, or anyone who needs to price anything, right? Because they got so much volume. And as we remember from our Finance 101 course, volume equals like good price or whatever the fuck. Like you can trust the price. The more volume, the more you could trust the price generally. Okay. Now, what was I saying? Okay, yeah. So that's how Binance is calculating their price. About 20 to 30% based on trading activity, 70% based off of its actual redemption value. Now, USDE is always supposed to be redeemable for $1. They have a redemption mechanism on Athena so that you can always redeem it, right? So why the fuck are we pricing it based off of what it's trading at? Because in reality, right, if we're going to be using this asset as, say, collateral, as you could use it on Binance, the only meaningful value of the asset is what I can redeem it for, not necessarily what I can trade it for. While some people might trade it for less or more than what it's worth, it's always it's got a floor price basically, right? It's always good for one. So why would we price it anywhere else, right? Not saying you need to hard code it, but how other platforms have done it, how Aave did it, this is why it was so good, is they tied the price of Athena directly to Athena's attested proof of reserves, right? We know the price of Athena because we can go to Athena and redeem it for $1, right? And we know the reserves are good for so much money. Much more logical way of pricing it. Binance wasn't doing this. They were going to update it like Friday, dude. They were going to update their pricing mechanism on Friday for these three assets. Curiously enough, right before this whole thing happened. Now, those assets did not depeg until most of the crash had completed. A lot of people, famous people, chud, saying that that's bullshit. You know, it's been disproven that, you know, prices didn't depeg till much later in the crash. They didn't have anything to do with the crash. My concern would be this. If everyone is trusting Binance for their pricing, right, for various other assets, usually altcoins, right? Altcoins, you're probably going to get your best price from Binance more so than anywhere else, right? You're going to get more accurate pricing. I don't think most people, maybe most people were taking their Athena pricing, their stable pricing, these liquid stake token pricing from Binance. But like I said, it makes a lot more sense just to grab the pricing directly from the attested reserves. I'm not saying that everyone's going to do that, but you're going to hear, you'll get what I'm saying here. Basically, my thesis is this. Because Binance was also using these assets as collateral on their exchange, if there was a depeg locally, it would cause cascading liquidations, something fierce. And maybe we don't see this price. I don't know. Maybe I'm crazy. I haven't actually seen the price, Binance price oracle for Athena and the timing. I'm assuming that people are right, that it did crash later, but here's the theory is, what if it didn't? What if we just didn't see the price update until later because it was processing the second the price dropped internally, just fucking shit the bed? I don't know. It's crazy. I don't know how transparent Binance is. I get the feeling that they're not quite that transparent. I will leave that investigation to other people. I'm just going to say this. I don't think it's off the table that the mispricing kind of sparked this, particularly when I learned that Binance was using USDE as collateral for everything. It seems kind of silly because they're pricing, why would I use collateral for an asset that I price? I don't know. Anyway. Okay, now we get into the fun stuff. Here are some of the conspiracy theories that I found. This is I've called this the Binance cartel conspiracy theory from Kook Capital. I think this guy is a hyperliquid maxi, if I remember. That's generally what I see him bull posting. The liquidation cascade on Friday was a coordinated attack that began with the USDE depeg. Again, like I said, that's assuming that USDE did depeg before everything happened, but existing evidence is showing otherwise. The attack occurred on Binance, and the depeg only happened on Binance. The depeg was only possible because of issues with Binance's pricing oracle. Binance controlled the vulnerability and the attack vectors. They also knowingly had poor pricing controls around USD and margin collateral. The timing of the attack around the Trump post was cover. It's my belief Binance carried this attack out themselves in an attempt to cause an industry-wide mass liquidation cascade with the ultimate goal of destroying Hyperliquid. Didn't work. Hyperliquid. Lots of people saying this. Lots of people really love the idea that CZ is trying to destroy Hyperliquid like he did FTX. I think oftentimes people are overlooking the fact that Sam Bankman-Fried destroyed FTX, not really CZ. Sam's poor business decisions, his outright criminal behavior, his theft, lack of morality, lack of virtue, the way he spent other people's money, that's what destroyed FTX, okay? I mean, CZ may have pushed the cards over, but Sam built that house. Aster did kind of have some really negative price action here. I think it fell down to about $1.40 or something like that. Yeah, about $1.44, $1.50. This is what my quant said was a support area for it, so it might be a good time to buy. I'm not. I keep getting owned on the leverage on that, and I'm not going in spot on that crap. Bro, it was LeCarrot, Donnie, and his friends that crashed all. Sadly, centralized exchange others had issues, and I'm sure bots added to it to force the liquidations. Who is LeCarrot? Link me LeCarrot. Some guy, shoot me that on Telegram who this LeCarrot is. We'll see who the criminal actually is. But yeah, I kind of dig this one. It's kind of satisfying. I can make a little point here, I think, because I've been thinking about this a lot. When I was over the weekend, I took some mushrooms. Okay, I communed with the elder gods, guys. I communed with the spirits, and this is what they told me. It feels really good when something goes really wrong to blame someone. We all know that. It feels even better when it's all of us, a bunch of people suffering, and to see one person doing okay and say it's their fault or whatever. But we got to resist the weaker aspects of our nature. That's something I'd really like to see happen in crypto. I'm not hopeful, but I would really like it if we could resist the weaker aspects of our nature, maybe engage a little bit more in our logic and reasoning, and wait until we have evidence before we jump to conclusions. Because it's not necessarily just because BNB didn't go down doesn't mean CZ orchestrated this event. Just because there's a news article saying Barron Trump is made $80 million trading crypto, he's a genius and he's making a lot of money, and World Liberty Financial dropped 30% an hour before a massive short sale was put in on the charts, it doesn't mean it's all connected, okay? None of this stuff necessarily means it's all connected. It could all be coincidence. It could be other actors using things occurring to their advantage. But, oh, I see. That's a good one. LeCarrot, as in Donald Trump, because he's orange. I call him Mr. President, but the libs over here, they like to call him the Cheeto or something like that. Carrot's a new one for me. Another conspiracy theory here from YQ. This guy is also a hyperliquid maxi. What you're going to see here is classic battle lines being drawn over who owns what bags. Hyperliquid maxis are out here defending Hyperliquid like crazy. Binance maxis are out here defending Binance like crazy. It's just going to be a war. But let's see if this guy's got anything useful to say here. this is like more of an actual theory. He's claiming that these three assets were specifically attacked in order to cause the depeg event so that they could cash in on their short and also scoop some assets that will obviously rebound at very low price points. He's got a nice little timeline here. He says 5 a.m. markets begin declining after tariff news. 5:20 liquidations accelerate dramatically, possibly targeting market maker positions. 5:43 a.m. I'll talk about this here, some guy. I have some thoughts about it. And we have the guy's identity now. And it's kind of another little rabbit hole. It's kind of interesting. I'll get to it in a moment. I know that I'm going slow, but I'm having fun here. So 5 a.m. initial market movements begin. Bitcoin decline. 5 a.m. UTC +8. But Bitcoin declined from $119,000 initiated. Trading volumes within normal parameters. Market makers maintaining standard spreads. 5:20. Market maker withdrawal patterns emerge. Volume spike. 10x normal trading activity. Altcoin liquidations accelerate dramatically. 5:43 a.m. with a critical depeg event. Again, people are saying that the liquidations have accelerated dramatically before the depegging even happened. So it's kind of like, what is even the point? Things that they depegged at the end, so who cares? I guess this guy's saying that the complete and total market didn't break down until 6:30 a.m. So he's kind of saying that this happened in the middle. We've kind of already explored. Well, there's some other interesting ones. These are things I did not mention, but are factors that kind of make me a little bit suspicious about USDE on Binance. Is Binance's 12% yield program and encourage recursive borrowing, creating positions levered up to 10x on USDE. Many traders use USDE as margin collateral, and despite being a stablecoin, USDE liquidity was surprisingly shallow. So the key point being that when USDE crashed, it didn't just cause direct losses, it triggered a cascade across the entire ecosystem. So if we take what we know about altcoin pricing, altcoins often priced off of Binance price articles because we trust Binance. We don't actually need USDE to depeg everywhere. We just need USDE to depeg on Binance. And if USDE depegs on Binance because so many people use it as collateral, all these positions that are using it as collateral, they're going to get liquidated. They're going to get closed out, which causes cascading liquidations, right? Cascading liquidations. And everyone's pulling the price information, right? So we're seeing, order book liquidity is thin on some of these assets on Binance. Market makers have withdrawn. I'm pulling my pricing from Binance. All of a sudden, Adam's $0. Adam's $0 everywhere now. Doesn't matter what's actually trading at in other places. Doesn't matter any of this other stuff. So interesting approach. This guy also adds more to the market maker angle. He says market makers are forced out. They withdraw from all order books simultaneously. They left the markets defenseless. But the strongest evidence they have is that altcoin prices on a Binance fell significantly lower than other exchanges, pattern consistent with major market maker liquidations. And I also quite enjoyed this point. I imagine you use ChatGPT for this. Following the money, potential short profits, $300 to $400 million. Asset accumulation at distressed prices, $400 to $600 million opportunity. Cross-exchange arbitrage, $100 to $200 million. Total potential extraction, $800 to $1.2 billion. That's crazy stuff. Crazy stuff. He offers, this is where it gets like very ChatGPT for me here, is that he says like the other explanations are cascading liquidations, concentration risk, meaning everyone was up on perps into the same assets too. So just very top heavy assets. Systems failing under unprecedented volume. Fear creating self-fulfilling prophecies. Reasons why he's suspicious, why these are his supporting factors for his theory. Venue specificity, because the price crash limited almost entirely to Binance. Only pre-announced vulnerable assets were severely affected. occurring within the exact vulnerability window identified by Binance. Market makers eliminated before main targets hit, and consistent with pre-positioned targets strategies. So my problem with the asset selection, that sort of thing, is like my classic problem with a lot of conspiracy theories, which is like, if they're going to do something really fucked up and evil, why are they leaving clues, man? Why would they write a press release saying here's a vulnerability and then they're going to exploit that same vulnerability? They would give them a lot more cover if they just did not address it and then exploited it and then said, oh my God, I wish we knew this was real. Well, I wish we knew this before, right? I mean, not that I'm a criminal or a liar, but that's how I would do it if I was going to lie and do crime. But whatever. They are smarter than me. So the CZ guy. So this theory is a little bit more fully fleshed out. Again, the timing doesn't necessarily all add up, so I'm kind of curious about it. This guy is probably the most to the point and a great summary here that I'm going to steal. The crypto market crash on October 11th is suspected to be a targeted attack that exploited a flaw in Binance's unified account margin system. The issue stemmed from using assets like USDE, WBE, and BN Sol as collateral, whose liquidation prices were based on Binance's own volatile spot market, not reliable external data. When the market dropped, these collateral assets plummeted, USDE to 65 cents, causing a cascading margin collapse that forced massive liquidations, including those of major market makers. The attack was timed to exploit a window between Binance's announcement of a fix and its implementation, resulting in estimated losses between 500 million and 1 billion. This event highlights critical risks in exchange to collateral policies and risk management. This is alluded to. Now, again, we need more facts. We need confirmation about when this DPEG happened because it's still not quite adding up. This makes sense, but it is weird that the DPEG does not show until halfway through this whole debacle because it was pretty bad before the DPEG even happened. And again, if you note, he doesn't even mention tariff thing, right? It's irrelevant if this is true, right? The tariff would just be a cover, or we could say like inciting incident. Now, I want to point out also that the Hyperliquid guys are really going in heavy on this narrative. Hyperliquid guys are super heavy on this narrative of Binance caused it. It's Binance's fault. Binance is really into it's no one's fault, but Hyperliquid is fucked up because they auto deleveraged all their people. That's kind of where we are in terms of the blame game right now. Hopefully that was informative. Hopefully that gave you kind of a clear idea of where we are. It took an hour to do what probably could have been a fight. Like I could have just read that one guy's post. It would have given me a good idea. But, you know, I think it's an interesting thing. And there's also kind of a lot of interesting. This has probably made me more interested in DeFi than I've been in quite a while. This event, it's really made me, it's really reinvigorated my kind of passion for these systems, and that I see like the potential for them to actually function in a way that's more fair and accurate than what we've got. But, you know, we still don't really know the truth of what happened. So is my faith misplaced? Am I completely misreading this whole thing wrong? Let me know. You know, am I fucking stupid for thinking DeFi might be on its way back now because of this? Let me know. Because, you know, it's not like DeFi is without blame. A lot of criminals there too. I wanted to talk about CoffeeZilla a little bit. CoffeeZilla is going to be doing a little bit of this. And then we're going to talk about who this mysterious shorter was, the guy who shorted Bitcoin at 120 and made a killing. The Hyperliquid whale shorting Bitcoin ETH yesterday was placing shorts exactly 1 minute before Trump threatened tariffs against China. The last short was placed at 2049 GMT. Trump tweeted at 2050 GMT. What incredible luck. That is crazy. That is insane. That is... That's not okay. 1 minute before is insane, dude. But don't worry, guys. We put our best guys on the case, and we fucking got him, okay? We fucking got him. CZ, it was him all along, dude. No, just kidding. CZ retweeted this AI picture, mother... This looks so AI, dude. This does not even look real. This looks like one of those pictures you get when you like, you guys remember use that website where it's like the average person. We've averaged all the photos on the internet. And this is what he looks like. It's like the average Korean Average. No, this guy's not Korean. Wait a minute. Let me do some advanced phenotype study here. This is a Chinese man, possibly from Central China. No, South China. Let's see. Let's see. All right, we'll guys, take a note. We'll come back to that. That is a profile picture you make for games. But anyway, so let's look into them a little bit. And into this is from Ion Chains. These guys are always, these kinds of accounts always freak me out, guys. Like, because it's like they're a little bit like, what do you call it? Schizo, but also like they're doing like on-chain research. So like, I'm not going to do that. I need them. I've been following guys for years that have been telling me Tether is going to implode every day. And they tell me the ETH is going to implode every single day. Those guys are more right than the Tether guys, but not in a matter of severity very often. Anyway, going back to it. This is the guy. Okay, this is the guy, man. This is the one who somehow insider traded his way to $100 million. Let's figure out how he did it because he's got a pretty sordid past. In an investigation to alleged identity of the mysterious hyperliquid whale who was over 100,000 Bitcoin. Recently, he sold over 4.23 billion in Bitcoin to acquire ETH and is the same person behind the 735 million Bitcoin short order placed on the same platform. So during August and September, he sold over 35,000 Bitcoin for ETH. He's got some addresses that received the ETH, the staking contract. And best of all, the guy, look, this guy did this excellent, like, fucking chain jujitsu or whatever the fuck they do. Pardon my language. I'm getting vulgar here because the sun's set. He did all this great analysis, but at the end of the day, the guy just has an ENS, dude. So the guy that shorted it just has an ENS. We just see his name is GarrettJin.eth, which is this X user right here. Thanks for sharing my personal and private information, CZ. Bro, you have a fucking ENS, man. And it's your first and last name on there. Like, what are you talking about? Anyway, let's get into his history here because it's pretty sordid, okay? Garrett Jin, who graduated with a degree. Elon, fix the platform, okay? Garrett Jin, who graduated with a degree in economics from Boston University in 2008, began his career as an intern at the China Construction Bank, where he worked until 2011. 2012, he founded his first company, Dio Trading, which operated until 2014. Subsequently, he changed jobs again, entering the crypto space by working for Huobi as an operation director. All right, wait, this guy's going way too. I want to hear the scam stuff. Okay, here's where it starts. From 2017 to 2020, he served as the CEO of Bit4X.com, an exchange that became the subject of a scandal accused of falsifying trading volumes. In 2023, it was flagged by Japan's Financial Services Agency for operating without registration. In February 2024, the private keys of hot wallets were compromised, with approximately $57 million withdrawn without any clear explanation. Immediately after, the website became inaccessible, withdrawals were frozen, and all operations ceased. In July 2024, Bit4X announced that its team had been detained and was under investigation by the police in Jiangsu Province, China. They promised to reopen for KYC-based withdrawals, but kept trading and deposits suspended for a complete rectification before shutting down. Hong Kong's SFC issued a warning for suspected fraud. Persistent accusations of withholding funds and misappropriation followed. Without full resolution, many users lost their assets in the unregulated chaos. So, the guy's a criminal, okay? He rugged an exchange, okay? He rugged an exchange for $57 million. And, like, not even like a cool or clever one. He just did a flat out, I just take all your money and just disappear. So after the collapse of Bit4X, he founded Wave Labs VC, launching projects such as TanglePay, IotaBee, and GroupFi AI. TanglePay is a mobile wallet for IOTA. Hey, I'm kind of familiar with that. But it's been inactive since 2024. IotaBee was a DEX on IOTA Shimmer for cross-chain swaps that ended up shutting down in 2024. Can the IOTA community catch a goddamn break? That sucks, dude. Yeah, they hired a serial scammer, dude. While GroupFi is a fearless Web3 messaging protocol for a gated cross. Okay. Yeah. So basically, wasn't there was something that connects him to like the insider trading stuff. Let me see here. I know I had it because it gets kind of crazy. It's like psycho, dude. It's like psycho crazy here. Okay, here we go. This is like this is like the real where it gets really schizo. So apparently this guy had White House pictures and he's claiming that there's an insider trading ring inside the White House and that they're collaborating with guys like this. So that basically the idea is this guy Jin Garrett has access to CCP members who gave him information on the short. Now, and that he's colluding with White House insiders. Now, personally, I think that's a little far-fetched because the announcement, look, he's a Chinese man, lives in China. He speaks Chinese. The press announcement about the rare earth metals came out like like Thursday night in Chinese. If you could read Chinese, you would know it was basic news. So it makes total sense to me that a person with that insight would also just short it. But he is also a criminal, so it's also not above. So he's also not above suspicion. You know what I'm saying? I guess the most popular theory, the one that I was running around with the most, was that it was Barron Trump shorting, right? I think that's kind of clear unless this guy's acting as an agent for Barron, although that seems unlikely. Why would you trust this guy? He's a freaking creep, dude. He looks like a sim, dude. He doesn't look like he has a soul, bro. So, yeah, I think the general idea being that, I mean, it's also not without merit, right? That the Trump family, look, I look, all right. I'm over an hour now. I kind of got my main point out about DeFi and who's the winners and who's the losers here. So I'm just gonna go off the wall, dude. I'm just gonna go freestyle here. All right. So there's a lot of suspicious shit going on, right? We look at Trump token, we look at World Liberty Financial. We know that these guys are not good actors, right? We could tell like it's extraction. It's extractive. Everyone knows it. The only reason anyone bought into Trump token, right? The only reason everyone's not super salty about it is because we all got really excited and doubled down on the crime meme. We're like, oh, we love crime. We love crime because there's like a 10% chance I make money off of it. But from what we're really seeing here is we saw a guy use, the prestige of his name and his position to just extract millions and millions of dollars from our industry. And then he launched World Liberty Financial, also continued to extract from the industry. So it's not without, suspicion that we would think he makes an announcement that he knows is going to crash the markets, particularly a very sensitive market to news like ours. It would make sense that Trump would have someone on his team short it, right? Makes perfect sense. Why not his son who's doing all the crypto stuff? Barron's great with the computer. He's always on computer right here. Because, or I guess Eric. Eric is supposed to be the crypto guy, but, we all know Barron's really the one calling the shots, right? But it's not just that. It's not just the suspicious timing of it, right? Because, that is very suspicious 1 minute before. What's also suspicious about it is that World Liberty Financial token dumped 30%, almost as if an insider dumped a large allocation in order to fund another trade at the moment. Speculation, though. Speculation. We're just speculating. We're just talking shit right now. It's also suspicious that, CZ, as Drac has mentioned many times on the show, it's kind of crazy, that CZ is back, right? And so public, because in terms of his release, he's not pardoned yet. He's not been pardoned yet. He is out. He's been released with terms. One of the terms is you're not supposed to run a crypto company, not supposed to run a financial company. CZ's kind of calling the shots publicly, but he's not actually working for him. He's kind of doing like a Bezos thing or something. Like, or I guess Bezos doesn't really do this. Who's a good example? I'm trying to think of a good example of a CEO that does this, where they essentially call the shots while not being formally part of the program anymore. They're not part of the company anymore, but they obviously hold a lot of sway. They probably also have a lot of vested interest still. Okay. He's using the bully pulpit, is what we used to call it in politics. He's using the bully pulpit to make action that he wants to have happen, right? The public support of Aster, the public support of these various meme coins, the public not feuding, it's kind of like passive aggressive exchanges with Jeff from Hyperliquid. Lil broing him, saying, I remember when you was a small fry. I remember when you used to come to me, CZ, at Binance and want to be like me, and now you think you're all cool, Jeff. That's how it's feeling, right? I promise this has a point. So CZ, he's moving fucking crazy, dude. He's moving crazy for a guy out on parole, okay? He's moving bricks. He shouldn't even be within a mile of the Yola, bro. It's crazy. Drac made a great point. The only reason he would do this if he knows something's coming. Drac had the point that it was possibly regulation changes. Safe bet. Trump administration obviously wants to facilitate more crime. It's how they're making their money. It's their bread and butter, right? They obviously want to lift up more. Look, it may seem like I'm flip-flopping here, right? But it's more so that there is a middle path, okay? We don't need to be all one way, all the other. That's usually the worst way to actually be. I don't want to be boiling alive, and I don't want to be freezing cold. I want to be just right. I want to be in that Goldilocks zone. I want there to be proper, smart, no nonsense fucking regulations. I don't want this place to be a complete and total Wild West, because we're all just going to get robbed and murdered, okay? That's just how it is. As we saw on Friday, okay? No regulations means a big dog can just obliterate us at any point. Anyway, I feel like I'm losing the track here. Maybe not. Anyway, the idea was that, regulations are loosening. CZ probably already talked to Trump or one of his representatives. They probably had a little bance. They're probably like, yeah, you're free to go. Things are going to get a lot easier. Keep doing the good work or whatever. In the best case scenario. Worst case scenario is something like, CZ, you're an expert in cryptocurrencies. You ran one of the largest exchanges. You know how these markets work inside and out. We're going to pardon you. We're going to let you out, and we promise you a pardon if you do one thing for us. Give us a good entry. Wouldn't that be interesting if that's what happened? A little quid pro quo. Hey, CZ, just do a little on the market. Just do a little, on the oracles. Just do a little. Let's working on the oracles. Tweak the oracles just a little bit. Only for an hour. Only for an hour. Give me an entry. That's an idea. Not necessarily true. I don't know. We'll never know the truth, but it's something. CZ posted just the other day a pic of him and Massa signing the SoftBank deal with Binance. Yep, it's curious stuff, isn't it? It's curious stuff. The thing that really grinds my gears, guys, and I'm probably not the only one feeling this. And again, this will be like my sign off here. Last 5 minutes. One of the things that really grinds my gears, really is upsetting, and I think it was really upsetting for a lot of people, is on Friday was kind of like the helplessness. And I talked about how it feels good to put it all on one person and blame someone, right? Because it allows us to vent our emotions in a healthy way, even if it's not necessarily productive, and sometimes it's destructive. But it is, unhealthy, unacceptable even, for the many to be continuously exploited by the few. And that's just something I want us to really think about, because it causes like helplessness. I guess that was the big thing on Fridays. It felt hopeless and helpless for me. I was thinking about even leaving the industry. I was like, is this just like what it is, man? Am I just like subject to the whims of the mega rich? Like, this was supposed to be the small guy's way in and out. I think we've all known for a while, crypto is not necessarily very kind to the small guy. Actually, you're actually much more likely to get chopped up. The degen American dream of bidding shit tokens to wife changing money has always been kind of a lie. I think we know, right? But when, the most trusted actors in the space are failing, and when our political representatives are kind of just hands off entirely, it feels like we've kind of just been abandoned to just torment. It feels bad. But I want us all to remember one thing. It's not over. Markets are turning back around. If you didn't die, you're still alive. You can win it back. It's time to take back what they took from you. It's still very possible, guys. But bet smart, okay? Bet smart. Stay decentralized, for one. Custody your own stuff, okay? It's a big reason why Zcash is getting very popular, right? People are noticing which way the wind is blowing politically, economically. That kind of privacy is going to be in high demand soon if things continue on the path that they're going. So, final words for you guys. Thanks for sticking through this with me. It was a lot of fun. For everyone who left comments, was chatting with me, I really want to give you a shout out. Warlock, Yankee, some guy. Thanks for joining me. Decent Crypto. Thank you guys so much. It was fun having you here. I hope this was informative in some way, or maybe even just a little bit entertaining or whatever. I will see you guys tomorrow for GM Sonic, 12:30 p.m. Eastern Standard Time. We're going to be talking more specifically about Sonic stuff. It'll be great. So, guys, stay safe out there. Turn off cross liquidity, okay? You don't need it. And be careful, because the market is not settled yet. Market structure still reforming. That's what the smart guys tell me. All right, I'll see you guys tomorrow. Hang in there.